Hello everyone, hopefully you are all doing good. I go by names of Alliance. I'm both a Forex and a crypto trader, and I've been meaning to give back to the community by making these very educational videos on a weekly basis. And in today's video, I want us to get a very better understanding on market structure, specifically the major structure or the external structure. As some of you already know, understanding structure is the only key to know how price is moving in real time without second guessing. So we are going to be breaking everything down step by step without confusion, only clarity. So make sure you stick till the end of this very video, because I can assure you this is the best, very detailed, beginner friendly video you will ever come across on this internet. So let's just jump in. So what is market structure? Most traders will tell you market structure is just the movement of price. It is, of course, but me personally, I see market structure as the language of price. The way how I'm able to talk to you, it is the very same way the market talks to us. So the market or the prices talks to us by moving in a structural form. So when they are moving in these structural forms, they are telling a story. So it is up to you to know what the market is communicating to you so that you make your trading decisions accordingly. So these types of structures, there's two types of structure. There's external structure, which is a major structure, and it is usually found on higher time frames like a daily and 4 hours time frame. That's where we can spot a major or external structure. This very structure, it is also called the overall direction of the market. Just think of it as a GPS, that it is giving you directions and you're just seated on your car, in your car, as just a driver following the directions. So that's what the major structure is for. And there is this internal structure or a minor structure, which is usually found in lower time frames like 1 hour, 30 minutes, 15 till down even 1 minute. So these very internal structures, it is very enclosed and embodied within this external or major structure. So just call it, I would say it is like just shadows. It is just a shadow of this external or major structure. So how do we just know that the market is communicating to us? This market structure telling us a story. So this market structure, they move in 3 behaviors. So this market structure or prices, they are either moving up, down, or ranging, not going anywhere at all. So when the prices is moving up, it is called an uptrend or a bullish market. So you have to keep that in mind. When the price is rising to the upside, it is called an uptrend or a bullish market. So when the prices are falling or going down, just like it is indicated here, this is called a downtrending market or a bearish market. So there is also this scenario where it is just going nowhere. It is just moving in a relatively equal place from just this place to this one. It is going nowhere at all. It is called a ranging or a consolidating market. So what is the story being told when a certain price of the commodity is just going up like this? This very behavior is simply communicating that the buyers available or the buyers which are present at that very moment are very, very much stronger than the sellers, thus pushing the prices of that very commodity high. And on the same side as this one here, a bearish market, it is the same story. but opposite one, of course. When the price is falling to the downside, it is simply meaning that the sellers available or present at that very moment are very much stronger than the buyers available. So how do we know the story is being told to us? So what you have to keep in mind, the price doesn't just move in a straight line like this. For example, if you're going to buy sugar at the shop, it is 5,000 today, and when the price starts falling, it won't fall from 5,000 up to 2,000. It can't happen. It can't just fall from 5,000 to 2,000. No, it will just have to fall in a corrective way. So it is just going to 5,000. It just goes down to maybe 4,500. It again goes up a bit, 4,800. Tomorrow it will fall on 3,000, just like that. It can't just fall from 5,000 to 2,000. It is impossible. And same way, it can just go up from 5,000. Tomorrow you find it on 10,000. It is not possible. So the same with the prices here. So when the market is printing the series of higher highs, it is called higher highs and higher lows. So simply, this high is higher than this one, and this low is lower than this one. And there is something you have to pay attention to. It is very, very essential. It is called a break of structure. That's why I have highlighted it here. So you need to pay attention to it. It is the only way you know that the price is going down or up, because it will keep on displaying those break of structures, or making those structures, or breaking structures to the upside or downside. So this very break of structure, it is very essential. You have to spot it in order to know where the price is going. So if prices is breaking continuously structures to the upside, then that is a bullish market, as we have said. And of course, when you spot break of structures to the downside, it is a very bearish market, as we have said. So what I'm trying to mean here is the market will always break structures, either to the upside or to the downside, or if it is not breaking structures, it is just ranging, and the market can never range forever, so it will have to break structure. So meaning break of structure is the beginning and the end of the story. So it is just everything in this market structure concept. So as I was saying, the uptrend or a bullish market is contained of series of higher high and higher lows. This high is higher than this one. This low is higher than this one. That's why it is called a higher low. This low here is called a higher low, because it is higher than this one. You can notice. So even this higher high, it is the same story. This high is higher than this one. That's why this one is called a higher high, and this one is a higher high, just like that. Higher high, higher high, higher high. So the market goes from a higher high to a higher low, a higher high to a higher low, higher high to higher low. So an uptrend is consisted of series of higher highs and higher lows. Same with the downtrend. It is consisted of series of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So basically that's it. So as I was saying, us as traders, we just have to know the overall direction of the market, so that we know how to position ourselves. Most traders, they just tend to ignore what the major structure or the overall structure is telling them. That's why they find themselves losing to the market. You just find yourself, the market is in this very, very strong uptrend, but for you, you're still looking for selling opportunities, which is very risky. So the market, of course, as it is going This move is called an impulsive move. This one is called a correction or a pullback. When it pulls back, you're supposed to be positioning yourself here so that you continue with the current trend, which is an uptrend. So if you entered from here, of course, if you entered from here, you're going to put your target on the recent higher high, because the very important or target of this higher low that is being put in the market, or this correctional move, it is to attack this higher high or break this higher high so that the already existing trend continues. As simple as that. This pullback comes in, or this correctional move, as soon as the market start to go up, just know it is going to attack this recent higher high so that it continues the recent uptrend. So once you enter on this very correctional move, your targets should be here. It is always advisable here, because after this higher low breaking this recent higher high, just know its work is done, meaning anytime from there it is just going to pull back, and that's why it is always advisable to keep your targets realistic. So in the same scenario with the downtrend, of course, this is called an impulsive move, a correctional move. Again, don't trade correctional move if you're still a beginner, because it is very risky and unpredictable. Always wait for a correction move to happen, then you enter on an impulsive move. And when you enter on impulsive move, of course, your targets should be very realistic. This lower low right here, because the main use or ambition of this lower high is to put in a new break of structure, meaning this is the target, this is the lower low that is being targeted. So as simple as that, it breaks, then correctional moves come in or a pullback, you enter from there, then you target a what? You target this very lower low. So as I've told you, after the price breaking the recent lower low, just know it is going to pull back or do a correctional move anytime from there. So be very realistic while trading. So I'm very sure I've so far covered everything here. I don't know if I've missed anything, but that's how things are. You have to make sure you are aligning yourself with the trend. You have to make sure you are not always looking for selling opportunities in an uptrend or a bullish market. And again, you have to make sure you are not looking for buying opportunities in a downtrending market. Always try your best to align yourself on the winning side. If there are buyers who are taking over or dominating the prices and taking them further high, make sure you are looking for buying opportunities. And when sellers are the one dominating at that moment, make sure you in those sellers who are pushing down the prices. And we haven't said anything about the ranging market. Of course, you have to understand that the ranging market, it simply means that the buyers who are present at that very moment are equal than the sellers. So meaning when the buyers try to push the prices up, the very same amount of sellers come up and they resist, taking the prices down. If there are 50 buyers at that moment, they push the price high, and in that very moment there are also 50 sellers present, meaning they also push the price down. So they just move like that, up, down, up, down, up, down, until more buyers or sellers are presented to the market, thus dominating one side. So that's simply how the structure moves. So please pay attention to these very structures, which is a major structure and overall direction of the market, in order for you to always have an edge in the market. So far as I've said, if you are finding this very video helpful, make sure you like this very video so that YouTube can recommend it to other people, thus giving me a motivation to bring these very videos in time. So without further delay, let's go ahead and spot some trending major structures. All right, okay, this is GBP JPY, or Great Britain pound, and a Japanese yen. So I want us to at least focus. I'm very sure you can already see this is the current market, and of course let's spot some trending market. So we can start from here. I'm very sure you can see this a higher, just a second. Okay, so this is a higher high, market comes, puts in a higher low right here. This is a higher high, this is a higher high right here, this is a higher low here, this is a higher high. So simply this is a trending market, meaning buyers are dominating the sellers, as simple as that. This is a higher high, this is a higher low. So meaning in this very market the buyers are more than the sellers, thus giving us this break of structure to the upside. So break of structures, of course, they are very present. Once this higher high is broken, this is a break of structure, this is a break of structure right here. So make sure you know how to spot them. There's another break of structure because there's a higher high being broken. There's another break of structure here, as simple as that. And there's this one here. And another reminder, in the next video we are going to be looking into internal structures, which is minor structures. Let me give you a very quick small example on that. So you can see this is a higher high and it pulls back for a higher low. So in this very moment there is this movement going on, this one here. Just a second, there's this movement going on. So from this higher high to this higher low, in order for us to spot a break of structure, meaning price should break this higher high. So from here, all these structures inside, they are called minor structures or internal structures. I'm very sure you can spot them. They are right here. These are called minor structures or internal structures. So as soon as this structure is broken, then we can spot or identify our break of structure, because this higher high has been broken. But all this movement within this higher low and this higher high, it is called internal structures or minor structures. In the next video we are going to be diving deep in internal structures and how they align or how they are formed within the major structure, which is the external structure. So of course this is a trending market. We can continue from here. Okay, price broke out from here, meaning this is the higher low, and this will be what? This is going to be our higher high. It pulls back here up to here, meaning this is a higher high. Again, this is a higher low, higher high. Price doesn't break up to here, so this is the higher high. It puts in another higher low, and here we are having a higher high. As simple as that. So we need to pay attention to the higher time frame in order for us to spot or identify that major structure. So another example on a downtrending market. Let's see if we can find something quick. I want to keep this video short and detailed. As simple as this. So this is a shift right here. So we get this lower low, another. So this is a lower low. Sorry about that. So this is a lower low right here, putting in a lower high, coming back here for a lower low here, coming in, printing another lower high. You can see this low is higher than this one, that's why it is called a lower high. And this low that is going to be printed, it is lower than this, that's why it is called a lower low. So as simple as that, this is a bearish market or a downtrending market where sellers are more in the market at that very moment than buyers. And of course that's it. And let's get another example on a ranging market. A ranging market, let me use okay, AUD. All right, AUD card. Sorry about that. Very, very good. So there's a ranging market right here. There's a ranging market right here. Let's go to 4 hours. I told you this major structure is only spotted on a higher time frame. That's a daily time frame, 4H, or even a weekly, depending on what you use as your higher time frame. What I can tell you, a ranging market is not always going to be perfect like how it was drawn there. So it is always going to have weeks that are clearing liquidity. I know we shall get there as long as you stick on me, you stick with me. So this is just a ranging market. You see, it is going nowhere. It clicks here. Once it gets here, the sellers, sorry about that, once it gets here, the sellers are introduced into the market. So once it gets on this level, which is a resistance level, sellers are introduced into the market and they push the market further down. So once it gets on this support here, the buyers also are introduced into the market, thus pushing the market where up again. Once it clicks on this resistance level, the sellers also come in, they push the market down, thus creating that consolidation or a consolidation or a ranging market. It reaches here again, the buyers are introduced into the market, they push it up just like that. So this very scenario, this is a very good example of a ranging market. It is advisable not to trade this market, but unlike your mentors, trust me, I'll show you how this market is traded and how you find opportunities to get some money out of the market when the market is ranging. For example, if we gonna imagine this very pair has been ranging for almost, let me see, for almost how long now? You see 56 days, almost 2 months. So are you not going to trade because it's ranging? Trust me, stick with me. In the next videos I'll show you how to trade this very market. So if you found this very video helpful, please consider subscribing. As I've told you, I be making these very educational videos on a weekly basis, meaning there's always new videos coming your way every week. So stay sharp, stay very smart in these very markets. See you in the next video.
Not a financial advisor, for education purpose only.